Hello, everyone. This is Andrew Berman from NMP, and you're watching another NMP webinar. This is our deal desk. So excited for to have you join us today. So if you know how these go, basically this is all about you. This requires your participation. Now, a bunch of you have actually already submitted scenarios and questions, and that's how this goes. So we're gonna deep dive into a little bit about Angel Oak. So if you're not familiar with Angel Oak, you'll learn a little bit about them. And with me today as our non-QM tour guide, we've got Stacey. Stacey Flanagan is joined us today. Stacey, how are you today?
Good, how are you? Thank you so much for having me. I appreciate it.
Okay, in full disclosure here, I am not an Angel Oak employee. I know I play one actually on TV here, but listen, I made a joke about the Angel Oak swag, and all of a sudden, I got the hat, I got this, I got some smoked meats, and so I figured actually the least I could do is show my support, for one of the first non-QM lenders, the largest non-QM lender, and one we're excited to partner with and do a lot of business with. And one that we've seen actually, what's great about non-QM is this is actually a product that brokers have an advantage over, let's say the local depository banks down the block. They're not going to be able to offer it, and they're not going to be able to execute as fast as the individual brokers are. And Angel Oak has had a history since. Stacey, how long have you guys been doing this?
Since the end of 2013.
2013. That was long before anyone understood what non-QM was, and I really actually am excited actually to partner with you guys. So Stacey, before we get started here, I just want to get everyone. Listen, you know how we roll. We will be in and out of this inside of an hour. Just take your phones, put it to silent. Just give us actually an hour. I promise you're going to get some great information. But we want your questions. So far, we've got a handful of questions that have already been submitted. If you use that question box, you'll see it actually on the right-hand side. Use that question box. As my grandfather always used to say, the only bad question is the one that you never ask. So. All right, without further ado, I'm going to go into a little bit about, so if you're not familiar with Angel Oak, let's talk a little bit about you guys.
All right.
Oops, let's talk a little bit about you guys. Hold on as I get everything ready here. Okay, there we go.
There I am. I have been, my name's Stacey Flanagan. Again, Andrew, thank you so much for having me. I appreciate it. I have been a account rep with Angel Oak since the beginning of 2014. And I am in the Tampa Bay, Sarasota, Orlando area of Florida. And absolutely love it here. I love the culture that we have here. We're like a family-oriented company. We can just bounce things off of each other. It's so great. And our portfolio programs that we offer, helping people get into their dream homes and thinking outside the box is just really what I love about the non-QM lending and Angel Oak.
Well, that's fantastic. So, Stacey, listen, but before we really get started here, I do actually have some polls I want to just kind of launch here. So first off, if you guys can please help me with our first poll. You should be seeing it up on your screen. So, have you closed a DSCR debt service coverage ratio loan in the last 12 months? So please let us know. We're just curious, actually, from the people that are participating, what kind of activity you've had in, non-QM and DSCR. So please keep those votes coming in. We're going to keep that open right now. We've already have about 40% of the room has voted. We're going to keep this open till about 55%. It's my lucky number, so keep it going. We got 46%. So the way you could shut me up is just by voting. Got 48%. Keep them coming. And I do see some questions have already started to flow in too already. Okay. All right, we are at 61%. All right, let's see what we got. Let's see what the room is that we're dealing with here. So here we go. We have 70%, 76% have not. This is exciting because everyone I know that does the DSCR now, I've obviously the investor cash flow product with that you guys do. I've gotten a lot of feedback from the interviews that I've done with some of the top non-QM brokers, and they love the way you guys do. But the DSCR is such a simple loan, so we're definitely excited to kind of get more feedback on this. And please, keep those questions coming. And it's going to close this poll here. All right, and getting back to the presentation. All right, so talk to us a little bit about who Angel Oak is and why we should be listening to you guys.
So we are the largest non-QM lender out there. Again, we've been in business since 2013 doing this non-QM specter of the portfolio lending. We're vertically integrated. So what that means is we underwrite to our own guidelines. We're not selling and underwriting to another lender's guidelines. These are ours. These are ours. We retain our loans. We have had 29 securitizations totaling over $10 billion, all AAA rated. That's huge. I mean, that is telling the market and everybody that these loans are good. They're producing, they're performing. I mean, these are good loans. To have that many securitizations all AAA rated is incredible. We are the largest non-QM lender. We did just shy of $4 billion in 2021. And again, we've been around since 2013. And since I came on board in January of 2014, so just after we opened, and just to see the increase in programs and products. When I first started, we had one product. It was 20% down, full doc only, and a 9.99 interest rate. And to see how much we have grown and expanded this DSCR program, I'm so excited to see that 76% have not done a DSCR and maybe don't even know what it is, because there is so much potential right now for you guys to increase your bottom line, which is obviously more money in your pocket and closing more loans, because this is one of the easiest products out there to close. So I'm so excited to be able to share what this product is with you guys. The other thing about Angel Oak, I'm going too fast.
Oh, sorry.
Is that you have access to our underwriters. You have access to us account executives, and then we also have account managers that support us internally. And if you can't get an answer from there, we'll get you directly in touch with the underwriters themselves, which is also very nice. Can't remember what was on that last slide that you already went through though.
Oh, I'm sorry about that. Let's go. Boom. There you go.
Oh, common sense approach. Yeah. So all of the portfolio lending is a common sense underwriting. It's not like Fannie or Freddie where you're running DU and you have a, approved eligible or not. I mean, every loan has its own story behind it. So tell us what the story is, and we'll see if we can get that particular loan done for those borrowers. We have a great website where you can price out your loans. You can send pre-quals to your account reps. And you have account reps that are in your area, local representation, boots on the ground that can come in and show you how to use the pricing tools, show you how to submit a pre-qual and go through our programs with you guys. So what is the investor cash flow? A lot of you guys probably know it as the DSCR, Debt Service Coverage Ratio Program. What this program is, it's for investment properties only. So they do have to own a primary residence. Dodd-Frank says we can't do a no-doc loan on a primary residence. So one of the ways that we make sure that it's not a primary is that they already own a primary, because we don't want any occupancy concerns. So you do have to own a primary residence. So this borrower can be purchasing an investment property, or maybe even refinancing, getting out of a private lender with the 12% rate. So these are good on purchases and refis. The loan itself is based solely off the cash flow of the property. What does that mean? So that means when you order the appraisal, you're ordering the market rent analysis, which is also called the 1007. If that market rent covers your new mortgage payment 1-to-1, so your market rent your PITI is $1,200, your market rent comes in at $1,200, you're good. You got a loan. We do as little as 20% down. No income, no employment. So imagine doing basically a no income loan with 20% down. You don't have to qualify. Just the home itself has to what we call debt ratio or cash flow. We go as little as 600 mid-score. We do want to see 4-year seasoning if you have had a hiccup on a foreclosure, short sale, deed in lieu, or bankruptcy. We do want those to be seasoned because, again, it's pretty risky product. And no limit on the number of properties a borrower can own. They can own unlimited amounts of properties, or maybe this is their first investment property. They want to start getting into the investment pool. We all know what's going on right now with investments in second homes on the conventional side. So maybe that somebody wants to start a portfolio of investment homes. You don't have to have any experience of having rental homes in your past. So that's another great aspect of this program. You can also close these in an LLC. We know a lot of people want to close in an LLC lately. That's totally fine. The LLC doesn't have to be seasoned any length of time. They can open the LLC today. Anybody that is on the LLC must be on my loan, and we do allow up to a max of 2 people. We also have what's amazing about this program. I've explained the cash flow coverage. You don't have to cash flow at all. Meaning, what does that mean? So if your PITI payment, your new mortgage payment total is, let's say, $2,800 a month, and the appraiser brings in the market rent at $2,000 a month, you're short. That's fine. We don't require any cash flow at all if you're at a 75% loan to value and have at least a 700 mid score. So again, 700 mid score, 25% down, you don't have to cash flow at all. That's amazing.
All right.
Go ahead. Sorry.
So that's so listen. There's a lot to unpack there, but it's really it's a simple loan. It's really a simple loan, and I have a handful of questions that I've already preloaded up. You ready? You ready for the questions, Stacey?
I'm ready.
Okay, fantastic. All right, and here we go. First question: how do you think about foreign nationals, expats? In this context, and are they subject to extra regulation? That's from Jonathan H.
So that is a great question. We actually do have a foreign national program that is linked to the DSCR. So our foreign national program is same thing, no income, no job required. They live in their country, purchasing an investment property here in the United States. And as long as that DSCR market rent on the appraisal covers their new mortgage payment, they're good to go. So there's no extra regulation. The only thing extra I would say about the foreign national program is our DSCR, we only source and season the funds for 30 days, where on a foreign national, we're going to source and season them for 60 days. We do want them to transfer the funds 30 days prior to closing in a U.S. account. And that's just for money laundering purposes. So they can season it 30 days in their country and then move it to a U.S. bank 30 days prior to close. That would be the only other regulation between the foreign national and just a U.S. citizen DSCR program.
Fantastic. All right, next question. We got from Dejuna L. What is the maximum loan amount?
So the maximum loan amount is 1.5 million. But again, all of our programs are based on the individual itself. So if you have something that's over 1.5 million, just use that as a guide, not a rule. And always reach out to your account executive and ask them if they can get an exception to go a little bit higher.
Now, Stacey, those who are not familiar with non-QM do not understand that mindset. We forgot about that mindset where logic plays into loan decisions. I love it. All right, next question we got here. All right, and hold on. Let's get over here. And all right, here's a scenario. Borrower just started a 9 to 5, has a little money saved up, but wants to enter the market as a new investor. So what is the minimum that's going to be needed for them to get started? This is from Alamhu T.
So the job, again, doesn't matter. They could be retired, they could be a housewife. I'm not going to know, because you're going to leave, again, you're going to leave the income and the employment blank on the 1003. So as far as what they do for a living, how long they've doing, doesn't even come into play. They do need as little as 20% down. Because it's an investment property, we don't allow gifts. So the 20% does need to come from, you know, whoever is on my application, from those borrowers. They also need to have a little bit extra 6 months reserves in the bank, just on the subject property. It doesn't even include their primary residence, just on the subject property. And they can be, again, new to starting an investment portfolio. They don't have to be seasoned investors.
Fantastic. Now, and if they are a seasoned investor, is there any difference in rate at all, or is it still all the same?
Yep, it's still all the same.
Fantastic. All right, next question. Requirements to refinancing an LLC. This is from FID.
So yeah, we can close in an LLC on investment properties on any of our programs. Anyone that's on the LLC must be on the loan, max again of 2 people, and the LLC does not have to be seasoned any length of time. It can be newly opened, it's fine.
All right, fantastic. Next question.
And there is no hit. I am hearing other lenders, there's a hit to the rate, and maybe I believe also the LTV for closing in the LLC. We do not have that. There is no penalties for closing in an LLC.
Well, that's awesome. Definitely good to hear. All right, so another one from AFID. Can non-QM loans be done on multifamily homes, single homes, and condos?
Absolutely. They can be done. We do 1 to 4 units, and condos can also be non-warrantable condos. We also have that program. Just let your AE know why it's non-warrantable. Make sure it's something that we can lend on.
Fantastic. All right, next question here. All right, here's the scenario. Seller needs some money to pay for a new purchase, and buyer would like to close the escrow and needs some bridge money. That's from Gracie C. What can we do here?
Seller needs some money to pay for a new purchase and buyer like to close. So I think what she's asking is, we don't offer bridge loans. So with the DSCR program, if that's what she's looking to purchase is a new investment property, they would, if they don't have the cash on hand, they could do a refi or even do a HELOC on their primary for the down payment of the new DSCR loan. I'm not 100% sure, but we don't have anything that does like a bridge loan and covers multiple properties. That's nothing that we offer. A good example of something that I actually refinanced, I had a broker that had 10 cash out refis, all on the DSCR, all with the same borrower. He had all these investment properties. They were all done with private mortgages. Not only did I get them all out of the private mortgage, I also helped him capitalize on the equity that he had. He got cash out on all 10 properties and used those to buy more investment properties. So that also might tie into Grace's question as well.
Well, that's awesome. Very cool. All right. So next scenario is a DSCR purchase, flip properties with a little down from my buddy Victoria.
So again, it's 20% down minimum on the DSCR. There is a 3-year prepay. It's not a fix and flip program. We don't want them to buy it, flip it, and fix it up and turn around and flip it in a couple of months. There is a 3-year prepay. They can buy out of the prepay 100%, but the property does have to be in good condition because it is such a riskier borrower. We want to have good collateral, so it does have to be as is appraisal. So if there's issues with the roof or anything structural or hazardous, that stuff would have to be fixed ahead of time. So that's what you kind of have to run into when you think of a flip properties. Are they buying it? Is it going to be structurally sound?
Fantastic. All right, next question. Do you offer any no-doc loans for investor?
Yep, that's what this whole program is about. Scenario is exactly what we're talking about. The DSCR program is what you definitely want to look into, Eric.
Fantastic. And purchase and rehab, Heather G wants to know.
Yeah, so again, the purchasing and also too, we do a refi, cash out, or rate and term on this program. Again, the rehab, I would go lean back more on, is the collateral in good condition? Is it as is? Is the roof in good condition? Because we are going to put a little bit more stress on having a good collateral on this type of program.
Okay, fantastic. Next question, another scenario. Borrower does not have an LLC or any company, only gets rental income. I was told by another lender they could not do a bank statement loan.
So yeah, Michael, this is kind of going, your question is kind of twofold. So the question about can you do a bank statement loan on somebody that just has their own rentals and rental income, that's not really considered a self-employed job. And that type of borrower, I would definitely direct you into this DSCR, because that's what this program is all about, is for those investors, for those people that just want to have whether it's one or two or a bunch of portfolios of rental properties. That scenario right there is made for this program.
Fantastic. All right, next question. How much reserves will an investor need? This is from Ada K.
So it's going to be 6 months reserves on just the subject property. So even if they own 10 other properties plus their primary, they only need 6 months reserves on our subject. And again, if you're shy, it's a guide, it's not a rule. So, get with your AEs, let them know your scenario. Maybe you only have 4 months. It's definitely something, if you have a good borrower, we make exceptions. We make exceptions on probably 85%. I think there is a statistic out there. I just don't know what the exact percentage is. So everything's based on case-by-case basis.
Okay, fantastic. And so now we have more questions. We're going to go into more questions here. I've already have a bunch of questions already lined up. And if we could start, and actually, Stacey, could you do me a favor? Would you mind sharing your screen and go through the quick qualifiers? Some people are asking questions that I think might be able to be answered by that. In the meantime, while you're getting ready, I'm going to do a quick poll over here. We got one more poll left, and I'm curious. And I'm going to launch this poll here while Stacey's getting ready. So in the last 12 months, have you closed a non-QM loan? So have you closed a non-QM loan in the last 12 months? Let's see, let's keep these votes coming in here. Keep them coming. We already have a third of the room has already voted. Keep those votes coming in. Keep them coming. We're going to try to get to 55% here. We're at 48. 52, 55, there we go. All right. And here we go. I'm going to share the results on our screen. And before I share them, Stacey, what percentage of the room do you think has done a non-QM loan? Take a guess. Sorry to put you on the spot here, but I want to see if
I'm going to go with 63%.
Have not done a non-QM loan.
Have not done no. Yeah. Oh, well, there you go.
There you go. That's it. You're almost there. That's beautiful.
Well,
yep. This is exciting. Like, to me, actually, just knowing how, the feedback that I've gotten from all the brokers that work with you guys, it is very cool. So if you're ready over there, I would love to actually just take them through the quick qualifier, because this actually, I feel like the quick qualifier does a great job of answering a lot of questions. Like you said, talk to the account executive, because there's room in all these products, but I think this is a good conversation starter. And then we're going to continue with questions. Are you ready, Stacey?
I think so. How do I do this?
Okay, I'm going to turn the sharing over to you, and if this works, great. And hold on for a sec. Let's find you here.
I'm an expert in non-QM, not IT, just so you know, so be gentle.
All right, so hopefully that works. If it works, great, fantastic. If not, we'll send a link. There we go, beautiful.
What do
All
you
right,
see?
we see your screen. We see actually the quick qual screen.
Oh, perfect. Huh. Okay, so this is our, excuse me, this is our website, angeloakms.com. It stands for Mortgage Solutions, so angeloakms.com. When you get to there, you'll land on this home page. This home page will take you to, there's two ways to get into the quick quote. That is our amazing pricing tool. It's so easy to use. You can either locate it here in the middle of the screen or at the top of the screen across the tab at the top where it says non-QM quick quote. Once you click on that, it's going to ask you your channel. Most everybody is probably wholesale with us. We do have a few non-delegated correspondent lenders. So for the most part, you're going to be the wholesale pricing. The loan amount, you're just going to type in your loan amount. Mid credit score. The mid credit score, and again on the DSCR, because there's no income, if you have two borrowers, you have a husband and wife, and she's a stay-at-home, but she's got a 780 score, he's got a 670 score. Me as an AE, I'm going to tell you, take him off. Put him on title with her, but take him off so that I can give you better pricing and use her mid score. So again, the little nuances that you can go through with your account rep and see what the best program and pricing is for your borrower. So let's go with a 760. Again, everything is just touch. You just literally touch it. It'll give you the choices. You select your choice. Same with loan to value. Again, our max is 80. On a refi, it's going to be 75. So I'm going to show you what it looks like at 75%. Housing history, how has their mortgage been in the last 12 months? If it's free and clear, you're going to stay on the 0 times 30. Here's where you have, one of the questions was, do we do multi-units? Here's where you can price out multi-units, 1 to 4 unit, or a condo. Purchase, rate and term refi, or cash out. So full doc, this is where you're going to want to change it to get correct pricing. So full doc, you're going to scroll down to where it says Investor Cash Flow, or DSCR. And now see, there's no qualifying programs because I haven't changed it to investment property yet. As soon as I change it to investment property, boom, there you go. Now, you'll see where it says LTV requested 75%, but it's telling you we can go to 80% with this particular scenario. Your par rate is going to be a 30-year fixed. And again, 4 months seasoning on bankruptcies, or the housing event is a short sale or foreclosure. So if you wanted to, say, change it, maybe they're doing a cash out refi, you want to lower the loan to value. You'll see as you lower it and as you change these, your rate's going to change. So this pricing engine is so easy to use, and it's good for any of our programs. I'm just happen to be, talking about the DSCR program. But this is good for any of our programs. And again, maybe you have a borrower that has a lower credit score. So you just go up there and change it to your particular scenario. You can play around with different loan to values, different mid scores, and see the best pricing for your borrower. And then when you're ready, your borrower's ready to move forward, you're going to click on that blue select button off to the right. This is asking you for your 3.4 file. Just hit next. You don't need to actually even worry about that. Pick your AE, Stacey Flanagan, and then you're going to fill out your information here. Then in your documents below, you can drag and drop your application in a PDF and your credit report. And had this been a bank statement program, it would then give you the area to drag and drop all your bank statements so we can calculate the income for you. Then you just scroll down, add any comments that you want. Maybe you want to tell me, hey, they had a foreclosure 6 years ago. Type that comment in the box, hit submit, it comes right to me. It's as easy as that.
Fantastic. All right, I'm going to take back over the controls here. All right, and hopefully, you
Do I
should.
need to do something?
What's that?
Do I need
No,
to? Oh,
no, you are good. Okay, fantastic. All right, so we're gonna go. We got a handful of questions that have come in, and please feel free to drop any more questions. All right, for starters, people are asking about the I-10 loan. They love that I-10 loan. Hey, listen, can you just really quick? But we want to stay focused on DSCR. You guys are doing an amazing job with the investor cash flow DSCR loan. But talk to us. Just give a quick overview of the I-10 loan.
sure. It's 75% loan to value. It is going to be a full doc loan only. So we want to see 2 years of US tax returns. They're obviously living in the US, and we're going to do it on a primary, single family, or condo only. So I cannot do that one on multifamily. And again, it is going to be full documentation for the income, which is going to be your tax returns, business and personal if they're self-employed, or W-2s, pay stubs, and again, 75% LTV max will pull their credit using their I-10 number. Yeah. And they still have to have the regular trade lines to qualify, 2 trades for 24 months or 3 for 12 months.
Right. And with the I-10 loan, that's for owner occupied, right?
Primary, yes, only.
Okay. Okay, fantastic. All right. Next questions. Max number of properties financed by Angel Oak. Great question, John.
That is a great question. So our guidelines say 5 per borrower. But again, I have an 8-pack in right now. So I'm doing 8 loans for a borrower right now, the same borrower. And the scenario I gave a little bit ago, I did 10 loans for 1 borrower. So wow. Again, it's a guide that we say 5, but if you got a good borrower, you know, we're gonna do more than that.
Oh, that's awesome. Fantastic. All right, next question we have here. All right. Do I need to order a market rent 1007 if you're not using DSCR?
You don't have to. So I'm assuming you mean like either on a full doc or a bank statement program. If you're not using the rent income to help them with their debt ratio, you don't have to order it. And the other thing on the DSCR program, you can choose to waive it because it does save the borrower about $150. So you can actually, the borrower can write a letter saying that they choose to waive the DSCR. And then as long as they're at 75 LTV or less with at least a 700, because you don't have to cash flow at all with that criteria, it's just a quarter hit to the rate. So add a quarter to the rate, you don't need to order the market rent analysis. Your max going to be maxed at 75 LTV and need at least a 700 mid.
Okay, and just someone's asking, this can be used for purchase for single-family residential. I mean, I'm assuming that's the primary use of these things.
Yep, single-family, just investment property, cannot be an owner-occupied. 1 to 4 units, condo, investment.
Okay. Can the borrower use business funds if they're 100% owner?
Yes. Great question. They can use business funds. You'll need something to show that they're 100% owner of the business, maybe articles of incorporation, a letter from their CPA, but yes, they can.
Okay, and someone's asking interest rate, which I think the best thing you could do is go to that quick qualifier. You can get the interest rate right there, right?
Absolutely.
Fantastic. All right. How about condo hotels? They're considered non-warrantable condos.
That is a non-warrantable that we will not do, unfortunately.
Okay. And are DSCR loans available for I-10 holders?
No, the I-10 has to be a primary residence with full income documentation.
Okay, fantastic. All right, everyone, keep submitting your questions. I got some more here. How about delayed financing? Do you offer delayed financing?
We do, and that's a great question. So knowing the market the way it is right now and how many backup offers are on properties, a lot of borrowers get nervous that they're not going to be able to close on time and they're going to miss this opportunity to purchase that particular home. And delayed financing has really become a big product right now. So a borrower, again, they decide they want to pay cash for the property because they don't want to lose it to the backup offer. They pay cash, but they want to recoup their cash right away. We can do that. And we're not even going to hit their loan to value as it was a cash out refi. So you can purchase a home for cash, turn around and quote unquote cash out, and we're going to give you the LTV as if it was a purchase. So if they qualify on the DSCR at 80% loan to value for the purchase, I'm going to turn around and refi you at 80% loan to value. I'm not going to hit you for cash out. I'm just basically recouping you the cash that you used to purchase the property. They do have to show that the cash that they used to purchase the property is their own funds. Again, no private lending that maybe wasn't recorded yet, or no gifts. So they just have to prove that they use their own funds to pay cash, and then we'll turn around and refinance it as little as a day later. The great thing too with us is the delayed financing, again, is huge. We don't have any seasoning to use appraised value on a rate and term refi. So we can use the appraised value right away. Cash out, we are going to wait 6 months to be able to use the appraised value. Just another little question that I get here and there that I wanted to throw in there before I forgot.
Fantastic. All right. Who orders appraisal, and what AMCs do you use?
So the broker will order the appraisal after the borrowers have signed our disclosures. They can go right into the loan in our portal. They'll see a tab at the top of the screen that says order appraisal. Once they click on order appraisal, we have 7 or 8 AMCs to choose from. They can pick one that they're already signed up with. They can pick a new one, and there'll be a link right on there to get credentials through that AMC, and they'll just order it right online.
Fantastic. All right. I love John's questions. John, any hit to rate for delayed financing?
No hit to rate for delayed financing. We're not even going to hit the rate for a cash out. We're going to, again, act like it's a purchase, basically.
Yeah. Fantastic. All right, next question. Talk to us about the foreign national option on this program.
Yeah, so again, the foreign national is, in our definition, somebody that lives in their country and they're purchasing a investment property here in the United States. So it's still going to be based off the DSCR program. They do need 30% down on the foreign national, so that's a little bit different. They don't have to have any credit. They don't have to build trade lines. They don't have to build reference letters like a lot of people make them do. I don't need any of that. It's no income, no job, no social security number. Literally, this entire program for foreign national is solely going to be based off that DSCR cash flow.
Fantastic. And with our borders opening up back in November, I'm sure the foreign nationals have been eyeing properties again. So I'm sure that's been doing great for you guys. Talk to us about, can you use this for a 1031 exchange?
Yeah, absolutely. You can use 1031 exchange on this program, 100%.
Fantastic. All right. Can you go over your investor program guidelines?
So the biggest caveat to this program is that they must own a primary residence. Because again, according to Dodd-Frank, you can't do a no doc loan on a primary residence. So one of the things that I do as an account rep, when you send me the pre-qual, I'm going to Google their primary residence, maybe jump on realtor.com or Zillow, make sure it's not listed for sale. That's another thing. Sometimes you as brokers won't even know that the borrower's listed their primary for sale. So I just do my due diligence up front, make sure that it does actually look like a, that it's going to be a true investment property. Mm-hmm. So I look to make sure that they own their primary, that it's not listed for sale. And again, that's pretty much it, down to a 600 credit score. Up to 80% loan to value. We go up to 75 for cash out refis. There's not really many guidelines to this program. And again, if 80% LTV, I guess, would be our only hard stop to this program, because everything else, again, if it's something that you need a little exception on, get with your account rep and see if there's something that you can do to get whatever exception you happen to need. Definitely won't go below a 600. I guess that would be the other hard stop. But other than that, there's not that many guidelines to this program. It's super easy.
Fantastic. So what debt service ratio are you looking for on cash flow, on the cash flow product? And can you give an example?
Yeah, so the cash flow is a 1-to-1. So if you're doing the 80% loan to value or any of the loan to values, and the cash flow covers your new PITI payment, including HOA, if there's HOA as well. So if the cash flow, the market rent on the appraisal covers your new mortgage payment 1-to-1, meaning the PITI payment is $1,500, your market rent comes in at $1,500 or higher, you're good to go. Now we do have that it can the market rent can come in at 0.85, so 15% below your PITI payment. You're still okay at the max loan to value. There is a quarter hit to the rate. So a lot of times when I get these to come in, if the appraiser, maybe didn't fully do their job and the market rent comes in a little bit lower, you're still okay. You might have a 25 basis point hit to the rate, or maybe you can go out and try and get lower insurance. That's another option, to get lower insurance. Or again, we can drop it to the 75 LTV as long as they have a 700 mid and not have to worry about any cash flow at all.
Fantastic. All right. Going back to the kind of the occupancy question, Sandy wants to know, so what if they rent and can prove with canceled checks, can they buy an investment home? I mean, listen, I've seen actually real estate investors actually that just live a lifestyle that they rent their primary residence, but they believe in real estate as an investment, not for their own. Is there any exceptions in these cases?
Yeah, so there is an exception to that. If they own multiple rental properties, and I can see that they're a true investor, then yes, we would look at that a little bit differently. If this is their first investment home, no, you're going to be, stuck needing to own a primary residence. But if this is their fifth rental home, or maybe they even rent in New York. I get some of those where they rent in New York or California where it's too expensive to buy, then that would make sense that this would be a rental property. But again, if they're an investor that has multiple investment properties, but they rent their own primary residence, then I would be safe to say that this is going to be another rental property.
It's so weird hearing common sense and underwriting. It's a good thing to hear that back again. So Sandy also wants to know, what is the minimum loan amount?
So the minimum loan amount is $100,000. We will go below that to $75,000, but once you go below $100,000, we're going to max the LTV at 65%. So there's an option to go below 100, but then you're going to be capped at a 65% loan to value. So I just say 100,000, keep it easy.
Yeah. All right. HOA and flood insurance included in the 1-to-1 ratio?
Yes. Yes.
All right. John with another amazing question.
Got it going on.
Yeah, John, you can keep them coming. So, and John also wants to know if you offer EClose or partial EClose.
We do not at this time. I'm not sure if it's something that our closing department is looking into right now, but right at this time, we do not offer e-closings.
Okay, fantastic. All right, continuing on with the questions here. All right, so got that. Can title be in an LLC?
Yeah, so that would be what you are doing when you close in an LLC. It's just going to be title. Your insurance is going to be in the LLC. The borrowers still have to personally sign and be the ones that are personally on your application. But yes, title would be held in the LLC.
Okay. How quickly can we go clear to close on investor cash flow loan? Ooh, how
So I've
quick?
been doing these literally less than 30 days.
Wow.
The biggest thing that I see that's holding things up honestly right now is the appraisals. They are taking a little bit longer to get back this day and age. So once you get your disclosures signed by the borrowers, you have that intent to proceed, I would order the appraisal right away, because those are the things that are taking the longest to get the loan done. Some lender or brokers will come to us with a transferred appraisal. Maybe they tried to go, whatever, FHA or something happened. They had already ordered the appraisal. We do take transferred appraisals. As long as it was ordered through an AMC, even if it's not one of our AMCs, that's fine. We'll take a transferred appraisal, and that will help not only cut down on cost for your borrower, but time as well.
Well, that's awesome. Okay. So next question for DSCR loans, will you allow gift equity?
No. So investment properties, gift of equity, or even gift funds, we don't allow on investment properties. They do have to be borrowers and arm length transactions.
Okay. Next question is, do you allow cash out refi on rental properties?
Yes, we go to 75% on a rental property on the DSCR for cash out. And just as a side note, up to 85% on investment property cash out on the bank statement program.
Okay. Will you allow short-term rentals, Airbnb, VRBO?
So we won't lend on short-term rental condos. Now, if the borrower is purchasing it to Airbnb it, that's fine. What they do with the property and how they rent it out is totally up to them. They can Airbnb, VRBO the property. I just can't lend on, because we kind of look at it like a condotel is a condo that allows short-term rentals.
Got it. Okay. Next question. Do you do? I don't think we asked this one yet. Do you do cash out refi on rental properties?
Yeah, we just had that one. It's 75%.
Yep. Okay. For clients who are purchasing to establish a rental portfolio, how many properties? We already covered that one. What was the max?
Well, again, we say 5, but I have in-house right now an 8-pack. I've done a 10-pack. I had another recently 8-pack. So, just leave that as a guide, not a rule, but at least 5 per borrower.
Okay, fantastic. All right, next question. If an investor owns an investment property, but it's not currently occupied, do they have to do a cash out loan with the investor cash flow product?
So if you're doing a refi of an investment property, it cannot be vacant. So they do have to wait and either order the appraisal after a renter moves in, even if they're Airbnb-ing it. As long as the appraiser marks that it's tenant occupied, that's fine. It cannot be vacant or in the middle of construction if we're doing a refi. Obviously, a purchase is different, but a refi, we want to have a tenant in there.
Fantastic. And I think that actually wraps up our questions. I have one more question that a couple of people have asked is, how do I sign up with Angel Oak?
That is a great question. So you can reach out if you have a local account executive that you already know. Definitely reach out to them. They'll send you a broker package, or you can contact info@angeloakms.com, and we can get you in touch with your local AE in your area and have them send you a broker package.
Fantastic. And do they have to have an account executive to use that quick qualifier, or can they go right in and start playing with it?
They can go in and start playing with it right now. They don't need any login credentials. Go to the non-QM quick quote, play around in it. And again, all of our programs, bank statements, full doc, ITIN, foreign national, they're all on that price qualifier already.
Okay, fantastic. And that's about it. That wraps it up. So, Stacey, you want to say anything in closing to get people excited and pumped up about the investor cash flow product?
Honestly, guys, again, one of the easiest programs out there, in my opinion. We've been doing it for years. We're fantastic at it. Lean on your account rep. If you're in the Tampa Bay area, reach out to me. You can reach out to me at 727-420-6811 or stacy.flanagan@angeloakms.com. And I will definitely help you get some more portfolio programs in your repertoire, help you build up your clientele, and definitely don't turn down a borrower or think that you can't help them get a loan and get into their home without contacting Angel Oak first.
Yeah, and listen, the thing I love about working with investors, if you haven't worked with investors, Angel Oak has a lot of tools and materials to kind of help you get started. But the thing I love about working with real estate investors, so a regular borrower maybe gets 7 loans, throughout their entire lifetime. I've heard of real estate investors that will do 7 loans in a year. So 7 loans over a lifetime, 7 loans in a year. You pick your choice, especially as we're about to see reduction in volume. It's a great area to get into, and working with great lenders like Angel Oak is a great opportunity. Stacey, thank you so much, and we love working with you guys and helping get the message out there about non-QM. So folks, thank you for joining us for another Deal Desk. This is where you are the star, and you're actually the person. Your questions are who we featured, and we have some more great ones coming up. So stay tuned to your inbox, and everyone, have a great day.
Thank you.